Before the 2008 crash, the market didn't just collapse, it showed warning signs. And if you look closely, some of those signs are starting to appear again. Let's go back to 2007 for a second. The S&P 500 was near all-time highs. Sentiment was positive. Most investors believed the trend would continue. Sound familiar? It certainly should, given how these patterns tend to repeat. But the first signal wasn't the crash, it was the initial drop. The market pulled back around 8–10% from the highs, and then the market staged a brief relief bounce. Most people saw that as a healthy correction. But structurally, something had already changed. This is where it becomes important. Price started losing the 200-day moving average. That level isn't just technical, it represents long-term trend. And once the market started trading below it, the behavior changed. Rallies became weaker and selling pressure increased. It was the start of a fundamental shift in market psychology. If you're into this type of breakdown, like and subscribe, because the next part is where most people get it wrong. The actual crash didn't happen immediately, it took time to build. After that first breakdown, the market rolled over gradually and then accelerated. From the highs to the bottom, the S&P dropped roughly 50%. It was a generational wipeout of wealth that caught everyone off guard. Now look at today. Price is still near highs, but it feels different. But momentum is not as strong. The steam is running out. We're seeing repeated tests of key levels, including the 200-day moving average. And that's where the comparison starts. History is knocking. Now, this doesn't mean we're heading for another 2008 exactly. The macro environment is different. Policy and liquidity have shifted. But the structure, the way the market behaves near turning points, that part tends to repeat. So the real question isn't, will it crash? That's the wrong focus. It's this, is the market getting stronger or just losing momentum? Subscribe if you want to understand the difference. I'll see you in the next one.